Hey guys, what's up and welcome to a new Tesla update video. So today, as per usual, we will take a look at the stock market, see what in the hell just happened today, what it means, what we can expect to see coming, let's say tomorrow, maybe even next week, and all that good stuff. So as usual, if you guys enjoyed the video, if you find it useful, informative, helpful, all of the above, even none of the above, don't forget to hit that like button. Even if you hate this video, don't forget to hit that like button. But let's just get right into it. So Tesla ending the day down 2.41% at $838.30, which isn't actually that bad considering it pretty much almost touched 800 today on the dot. It was very close. I think lowest was like 808 or something like that. So a pretty decent recovery, like a massive drop into a good recovery. Now, what does this mean, right? Like, okay, cool. So like this happened, you know, I, as usual, predicted this yesterday. I called the bull trap. It was literally a bull trap. We plummeted like almost 6% today, recovered about half of that. Good recovery. Don't get me wrong. Actually, a really solid recovery. But what does it mean? Like, okay, cool. It happened. Great call. What's next? I'm not going to lie. I'll be completely honest. This one is a little bit harder to read. Now, based on what I'm seeing right now. So let's take a look at just the macro first, right? So let's take a look at the daily here on Tesla. Number one. Well, let's take a look at the weekly actually, because the weekly is almost done. Don't forget, tomorrow is the last day of the week, guys. And you guys know how I feel about Fridays. I don't like Fridays. I'm usually fairly bearish on Fridays. I think more often than not, like let's say out of 10 Fridays, I would expect like easily half of them at least to be bearish. Probably like maybe 7 out of the 10 days to be fairly bearish days. You know, could people take profit into the weekend? The day traders exit their positions, or like the maybe weekly swing traders or something like that. Maybe they exit their positions. They don't want to really hold over the weekend. I mean, what's the point? Monday's a fresh day. You know, just re-enter Monday if something happens, or wait till Tuesday. It's not a big deal. On top of that, with all the whole the whole thing with Russia, etc. Happening still Ukraine. That's still like not looking that great, obviously. The CPI came in actually exactly as expected, which is why the market kind of was wonky today. Yeah, the point is that a lot of people don't want to hold unless you're like obviously an investor. You don't really give a shit. But traders, swing traders, some of them tend not to want to hold over the weekend because who knows what will happen over the weekend, especially nowadays. What kind of bad news potentially might happen, right? It's just not worth the risk. And if good news happens, well, you just miss on profit as opposed to now having to back hold. It's not worth the anyway. That's my point on Fridays. That's why I usually think Fridays are like overall bearish than bullish, but not always, of course. Anyways, moving on. So tomorrow's Friday, right? So what's going to happen tomorrow? What am I predicting for tomorrow? What can we expect tomorrow? So unfortunately, I have to admit that, again, looking at the daily, Tesla is in a bear flag. So we'll see what happens with that. I'll talk more about that on the 1 hour later. It's not, it looks better on the one. It's easier to show on the 1 hour because it's like a micro bear flag. Anyway, so on the weekly, as I was talking about it, we are of course still up underneath this teal line, and I've said this many times, guys. It's not looking like the best teal line in the world. It's not looking like it's the best chances to break the teal line in the world, in my opinion. Again, massive resistance, in my opinion. We're also coming into a second resistance over here, probably next week actually. So again, I don't think we'll break this teal line this week. Like I'll be shocked if we do. Next week, however, is where it'll start getting a bit more interesting because we're essentially coming into contact with both of the lines roughly. You can see in the daily here, right? It's like intersecting right here. This will be like on the 16th, which I think will be next Wednesday, actually, roughly around there. Then it's like now we have double resistance here. Not only have to break over this insane teal line of resistance, but now this red line is here again. It'll be tough. I'll be honest. Like I honestly will be shocked if we break it. It's not impossible, but I really think it'll take some kind of catalyst. So unless we get a catalyst, like I just don't see us breaking that. Like especially with the way the macro, the overall macro of the market is right now. It's just not looking very bullish, man. We'll talk more about that when we visit the QQQ and the SPY. So essentially, that's kind of what the macro level looks like, right? Nice push up. The hammer candle, though. Again, I'm not a huge fan of these kind of hammer candles. I'll explain why. So yeah, macro, again, I just don't see us pushing too much farther than what we're currently at. The best case scenario I can see is like 870, 875 maybe. Like best case scenario tomorrow. Like best, like that is just like by far the best case scenario. We're looking at, let's say, the 1 hour. Actually, no, let's quickly look at the daily. So the daily candle, you can see a lot of people are going to look at this candle and they'll be like, wow, it's a hammer candle. And hammer candles are usually bullish, right? Usually what signifies a hammer candle is when you have a long wick and the candle literally looks like a damn hammer, right? It's that simple. But what does that mean? Like, why is that considered bullish? So there's two things. Number one, I actually think this one is not that bullish, and I'll explain why. But the reason a typical hammer candle is bullish is because it signifies that the stock fell down quite a bit and then massive buyers stepped in and pushed it back up. Shows that, there's just insane buying pressure in this area, which is still very true even for this hammer candle that we see here. The issue with this hammer candle, guys, is the fact that it's not this hammer candle. What does that mean? Well, I'm sure you can tell. One is green, one is red. Why does that matter? Usually, okay, not all hammer candles are automatically like, oh, that means it's instantly bullish. Tomorrow we're mooning, because look at this hammer candle right here. This was like a decent, that's a pretty nice looking hammer candle. And we actually ended up running, but it was just, the selling pressure was here regardless. And we followed it up with like an insane red day. So it's like the hammer candles don't always signify like bullishness. But that was a green one. A red one isn't as bullish to me. It still can be, but I would take it with a bigger grain of salt, if that makes sense. Why? It's quite simple, actually. So when you have a green hammer candle, what does that mean? Well, that means that, let's look at the red one. So in the red one, where do we open? We opened all the way up here, I believe it was, right? I think we opened here. Wait, where did we end? Yeah, we ended at 8:30. Yeah, so we opened up here, right? Not too crazy. Let me just double check that and just make sure. I kind of want to make sure 8:53 is where we opened, exactly. So we opened up all the way up here, right? Which is, signifying the open itself. Let's make the candle a little bit more, zoomed in like this, right? Fell all the way down. Buyer stepped in, pushed it all the way back up here. But the issue with this is we couldn't retrace and go back higher than where we opened. Ideally, in my opinion, you want a hammer candle that's green, because it signifies that not only did the buyer step in, but you're also able to even push through the opening price. We couldn't do that. We're still lower than where we opened. We're lower than yesterday's close. Like, those two things almost like counteract the red hammer candle, which is why I don't personally look at red hammer candles all that much and look at them as being that bullish. Like, it's still good. Don't get me wrong. I'm not saying it's like bad. I'm not saying, oh my God, this is horrible. No, it's still good. It's just not as good, in my opinion. It's not as telling. It's not as reliable. Because if you look at, for instance, let's say this hammer candle, right? This is a nice looking hammer candle, because what happened? Well, we opened up right at this price level, which was the 831. We dropped all the way down to pretty much, actually lower than 800, we dropped to like 792. Not only did the buyers step in, but the buyers were able to step in, push it higher than we opened, and close higher than we opened, which signifies this nice hammer candle. Like, imagine if this one pushed from down here all the way up, past to where we opened, and closed, let's say, at 862 as an example. And then this would be the green right here. This little section right here would be a green hammer candle. That signifies even more bullishness, because not only are we buying up all this area, but we're also pushing it up above the opening price, which is like extra bullish. That's why I would personally take these kind of hammer candles with a little bit of, grain of salt. We'll see what it means tomorrow, but again, it's not like the best thing to rely on, in my opinion. Anyway, like I said, we are in a bear flag, unfortunately. So, we kind of went over here, played around, like I said, triple top, didn't like it, plummeted, and now we're doing a bear flag. That's usually what happens with the bear flag. Bull flag, you skyrocket, consolidate downwards or sideways for a bull pennant, and then you rise up, usually break out and continue rising. Bear flag is the opposite, run up, nothing happened really here, so we got pulled down. And then now we're forming a bear flag. So with that being said though, the bear flags usually have 5 touch points. 1, 2, 3, 4, right? One thing you can argue that the bear flag was like something like, this is such a weird one, because technically for this bear flag to play out properly, again, 5 touch points, that means we'd have to run up to like 872 or something like that, roughly, or like early tomorrow. Like, it would have to run up to like 875 or something like that, whatever. For the fifth touch point, 1, 2, 3, 4. So for the 4th touch point into the fall, 5th touch point, it'll be around here and then breaks down. That's usually how it happens. Not always, but that's usually the more traditional, typical way for just flags to play out. The issue is it's hard to imagine us to run up to that tomorrow. Like, tomorrow, this would have to happen tomorrow. Like, I just don't see why we would rise suddenly all the way back up to like this price level that we had up here and just casually break through all of these. Like, again, that's the only issue I'm having issues with, or having issues reading or like understanding. Like, that's why I'm having issues reading this current chart a little bit. I just don't see why that would happen. So realistically, what I personally think would happen, if I had to take a guess on it right now, in terms of like a realistic best case scenario, is we gap fill. We have this gap over here at this 858. I think realistically, best case scenario, we rise up somewhere in the morning, gap fill this thing, and then probably drop for the rest of the day as people start taking profits into the end of the day. That's my kind of realistic best case scenario guess. That's like the realistic bull case for tomorrow. The bear case is the fact that we kind of get resisted around this general level. You can see there's a lot of like, supply and demand in this area, depending on, which area you're coming from. In this case, we're going up towards it. In that case, there's gonna be a lot of supply. Yeah, there'll be a lot of supply, aka a lot of selling pressure, similar to what we had over here, how we kind of pulled up and then, dropped. I think the same thing might happen here. We might go up and then drop. In this case, what we'll set up is kind of almost like a head and shoulders, a bearish one in this case. So we had a bullish head and shoulders here, kind of got messed up though. We kind of played it out too, to be fair, with this little move up here. But now we're setting up this like actual bearish head and shoulders where we have like a shoulder here, a head here, and a shoulder here, which is why I wouldn't be surprised if this like 840 to 845 area ends up being tough resistance. Now, what do the bulls want to see to break this pattern? We want to see a break above 850 at least. I would say if we can break above 850 tomorrow, it nullifies this bearish head and shoulder pattern. If we can't, it's in play. So keep that in mind, guys. I would definitely watch for that, this kind of like 840 to like 850 area. Definitely watch for that area to be like huge resistance. But again, if we can break through 850 and especially like 860, I think we're going to be probably touching either gap filling. And if this break, again, if 860 breaks and we gap fill and it breaks through, then we're probably going to go all the way up here to like 875 or something like that. But again, if I had to put my money on it, I would pretty much guess the fact that we probably won't push above 850. I think this head and shoulders will play out, aka this bear flag as well. And I really do think that we're going to plummet down to probably retest one of these lows over here around, somewhere in the 700s, maybe worst case 760, something like that. That's my current guess. Hopefully this will be the last drop. Hopefully this will be the last little drop. Hopefully after this, we can start looking for an actual rally towards the upside and the bulls can finally start taking control. But again, guys, taking a look, the volume, same as yesterday, nothing too crazy. The QQQ, same as yesterday. The SPY, even lower than yesterday on a kind of a decent, kind of a rally day, if you will. We dropped because it started off horribly, but you can see the bulls actually pushed up and actually made it a green candle, aka we actually ended up closing significantly higher than where we opened, which is actually kind of a good thing, but it ended on lower volume. It's a very tough market, guys. That's essentially what I'm seeing right now. It's a super hard market to read. I think we've been doing a good job overall, to be honest with you. But again, it's a tough market to understand and fully read. So keep that in mind, guys. That's essentially what I'm seeing for tomorrow. A little bit of a longer video because there's a lot to talk about. It's a very tough market. Very again, we're having the QQQ and the SPY move like fucking penny stocks. Like that's insane. It's tough. It's a tough market, guys. Tough to read as well and tough to play in. But either way, that's it for this video. Let me know what you guys think down below. See you for the next one. Peace.